Let's be real. Right now, homeowners across America are sprinting to refinance their mortgages. Applications have spiked more than 50% in just 1 week. Why the sudden rush? Because mortgage rates that were crushing buyers are finally slipping down. And anyone who moves fast could save thousands or regret waiting. Mortgage rates have been sky high for the past 2 years. 7%, sometimes higher. That's been a chokehold on buyers and owners alike. Now the tide is shifting. Rates are sliding closer to 6%. And that 1% gap changes everything. On a $400,000 loan, 6% means about $2,300 a month. 7% means about $2,600. That's $300 saved every month, $3,600 a year. Over 30 years, that's more than $100,000. This is why the refinance frenzy is exploding. It's not just numbers on paper. It's real money back into people's pockets. But here's the catch. These windows don't stay open forever. Rates move fast, sometimes up, sometimes down. The Federal Reserve is cutting, pausing, and adjusting. Markets react instantly, and lenders tighten or loosen overnight. That means today's deal could vanish tomorrow. Homeowners know it, so they're flooding lenders with applications while the window's open. Not everyone should refinance, but if you fit the right profile, you win big. You win if your current rate is above 7%. You win if you plan to stay in your house for at least 5 more years. And you win if the savings outweigh the fees. Closing costs are the enemy here. Appraisals, title searches, origination fees. They can add up to thousands. So you've got to run the math. If refinancing saves you $300 a month, but it costs $6,000 up front, you need at least 20 months just to break even. That's the key calculation. And lenders won't spell it out for you. You have to fight through the fine print. Refinancing sounds like a gold mine. But banks don't hand out savings without strings attached. Some lenders lure you in with teaser rates. They bury the fees in the closing packet. They stretch your loan back out to 30 years, even if you've already paid 10. That's how they trap you. Sure, your monthly payment goes down, but in the total, you might end up paying more over the life of the loan. And here's the dirtiest trick. Cash out refinancing. The bank says, take out an extra $50,000 while you're at it. Sounds good in the moment. But now, your debt is higher, your term is longer, and your risk is bigger. It's financial quicksand disguised as easy money. So why is everyone rushing in right now? Because the Fed is under pressure. Inflation is cooling but not dead. The economy is slowing but not collapsing. Markets are begging for cheaper money. That's why rates dipped. But the Fed could reverse course fast. One bad inflation report, one oil shock, one geopolitical crisis, and rates shoot back up. Homeowners know this. That's why they're sprinting to lock in deals now. Better to secure 60% today than risk 7 tomorrow. So what's the game plan for you? Step 1, run the numbers. Compare your current payment to a 6% refinance. Use a calculator. Don't trust rough estimates. Step 2, count the fees. If it takes you more than 2 years to break even, it's a bad deal. If it takes less, pull the trigger. Step 3, avoid the traps. Don't reset to a new 30-year unless it makes sense. Don't cash out unless you've got a disciplined investment plan. And step 4, shop around. Never take the first offer. Different lenders give wildly different terms. Treat it like buying a car. Negotiation is part of the process. Here's the blunt truth. Refinancing is not just about lowering payments. It's about redirecting wealth. Every dollar you don't pay the bank is a dollar you can invest. Stocks, bonds, side hustles, even just building cash reserves. That's why the rich play this game ruthlessly. They refinance when rates dip. They move debt around to cut costs. They keep their capital working, not sitting in interest payments. If you want to stop being broke on purpose, you need to start thinking the same way. This surge isn't just about homeowners. It's about the entire economy. Banks make less money when people refinance. That pressures their profits. But it also frees up cash for consumers. More spending power means more economic activity. That can fuel growth, or it can fuel inflation again. That's the tightrope the Fed is walking. And if refinancing keeps accelerating, it could reignite demand in the housing market. More buyers, more competition, higher prices. So today's savings might turn into tomorrow's housing bubble. That's the bigger risk nobody's talking about. Refinancing right now is an opportunity, but it's also a battlefield. Move too slow and you lose the window. Move without calculation and you get trapped in fees. But move smart and you lock in savings that compound for decades. So don't just watch the headlines. Run your numbers. Make the call. And redirect that money back into your future. Because the truth is simple. The banks aren't going to fight for your wallet. You've got to do it yourself. If this breakdown helped you see the refinance rush for what it is, hit subscribe. We're building Wealth Directive to cut through the lies and hand you the real tools. Because money doesn't wait, and neither should you.